Hello guys, this youtube welcome to my YouTube channel. This is a trade recap on a trade I took on USDCHF yesterday, being July 16, and I closed the trade this morning, July 17, and I will tell you the reason why I closed the trade and the reason why I took the trade. First of all, I took a couple of trade yesterday. I took a trade on USDCHF and a trade on GBPJPY or GBPAUD, but I also missed some trade yesterday, but I'm going to show you them. But first of all, let's go through the reason why I took this trade and the reason why I closed this trade this morning. Okay, let's go straight to the higher time frame, the daily time frame. Now on the daily time frame, what can you see? We can clearly see is just right in our face that the daily time frame is bullish. As you can see, the daily time frame is bullish. Then we'll keep that in mind. The daily time frame is bullish. That is our bias, is bullish. Now we'll keep that one in mind. That is what we'll be working with. Now the main analysis will be done on the 4-hour time frame. On the 4-hour time frame, that is where you want to draw. That is where I draw out my key levels, my point of interest that I'm expecting the market to continue buying from or react from. And as you can see, this was my first key level. This was my first key level because the market came down. First of all, let's draw our market structure. Then we are dealing with the recent market structure. Don't forget. Okay, let's start from here. As you can see, we can see that the market is creating higher high, higher lows, higher highs. This is a bullish market structure, and the market came up to this place. When the market was here at this level, this was our recent structure. Look at it. This was our recent structure from this low to this high, here, to this high is our recent, this is our recent structure, from because the market already broke structure here. As you can see, the market broke structure here already. So from this low to this high is our recent structure. So what we have established, that the market is on a bullish trend. So this is our recent structure. We have already marked out our recent structure. We already know our recent structure. So what do we want to do? We want to mark out key levels or point of interest in our recent structure. As you can see, this is my first key level here. This is my first key level here on the point of interest, and this is my second key level. The reason why I took this place as a key level, okay, this was my first key level, and this one was another key level because the market broke structure from here. This was the move that broke the structure, came back and retested this key level and broke structure up. So this was my first key level, and this was my second key level. This fair value gap here was my second key level. This fair value gap was my second key level, but the market came down. When the market was coming down, the market came down and tested this key level. As you can see, the market tested this key level and broke structure to the upside. You can clearly see it. The market broke structure to the upside. Let me remove this. As you can see, look at it. The market came down, reacted from this my key level, and went up straight and broke market structure. You can see the candle, that black candle that broke the market structure. Now, when the market broke structure, we are now looking for our recent structure. Now, this now become our recent structure. From here, this is our low, and this is our high. So look at it. The market moved from this low. This was the low that came up and broke this structure. Now, within this new structure, this is our recent structure, we are going to be looking for another point of interest. another key level, another point of interest that will continue the bullish move. That will continue what? The bullish move. Now, this is where the real analysis now comes in now. And as you can see, within this our recent structure from this low to this high, look within inside the structure. Inside the structure, what can you notice? You can notice that there was a minor structure. Look at it. The market came up, create a pullback and move up. Now, what can you do in this case? When you want to mark out a key level, you look for this place as a key level. Now, I took this place. For me, that is for me. This place is my key level. As you can see, this place is my key level. I draw this place as a key level. Why? Because there was a liquidity before the key level, which is this particular one here. You can see when after the market created this low, as it was coming up, it created a pullback, which is a liquidity. And after the liquidity was created, you can see the massive move upward, the massive candle. Look at it, the massive candle that went up to break this market structure. So there was liquidity here. Now, when the market was retracing back, the market also created another liquidity. Although I took a trade here and on this place, after the market took out this liquidity, I was expecting the markets to start the bullish move, but that did not happen. I took a trade from here. The trade gave me 1:1, and I break even, and the market came back, hit me or break even. So now came back to this my key level. Now, when the market tapped into this my key level, I was now waiting for a confirmation on the lower time frame. After the market gets to this my key level. As you can see, after the market retraces back to this my key level, I was now waiting for a confirmation on the lower time frame. And what is that confirmation? Let's go down to the 30 minutes time frame. That was when I saw the confirmation. As you can see, the market reacted to our key level, which is this particular level you are seeing here, and the market started showing shift in order flow. As you can see, this was the last low, and the market created the high, came back, created a low, and broke this high. As you can see, it broke this high like this. Some people will call this change in market structure, which is market structure shift, or change in character, which is, yes, change in market character. Some people will call it change in market. Me, I call it change in order flow, because this is an order flow. As you can see, the market was creating a order flow. Now, this is an order flow. The market change in order flow, meaning this our 4-hour key level that we draw, that the market is reacting from, is going to hold. It's going to hold. And this is what I did. After the market broke this structure, and shifting and we get a shift in order flow, and I draw a key level that I was expecting the market to come back to. You can see this is our low. When the market broke structure up, the market created a liquidity. This is it. I mark it at. This was it. A liquidity. As you can see, there was a liquidity, and this was my key level that I wanted to take the trade from. As you can see, I mark it at a key level. The market was around this area. When I mark at that key level. So I was expecting the market to come down and take out this liquidity, tap into my key level. Then I want to wait for a bullish candle, a bullish 30 minutes candle to close. Then I would take the trade from this area. But that did not happen. Guess what happened? The market did not come back to take out this liquidity. And the market did not tap into my level, my entry level. What did the market do? The market came back to this place and broke this structure again. As you can see, retraced back and broke this structure again. Though I have two things in mind. Is either the market come take out this liquidity and tap into my entry level, or I want to see the market break this high with a body, with a candle body. If the market break this high with a candle body, we take the trade from that level, which is this particular high. This particular high. I want to see the market broke that level, and as you can see, the market broke it with this candle. The market broke it with this candle. When the market break this level, when the market break this level, sorry, I'm rushing. When the market break this high, went up, I was waiting for this other black candle to retrace back to this, maybe, retrace back to fill in this candle, this huge candle, to fill in the candle and tap me in, and went up. But the market did not come back. The market went up and created a fair value gap again. And this is another key level for me again. As you can see, this is another key level for me again. This one are entry patterns. Don't forget, this one are entry patterns. Is a signal and a entry pattern. This is another key level for me again. As you can see, this is another key level for me again. And that key level, there is a fair value gap inside the key level after the market broke structure. Since I could not take the trade after the break of the structure, I waited for the market to come back to this key level, and there is a fair value gap which increased the confluence. And as you can see, the market came, snap it. I actually took the trade and went up and start going up. As you can see, market start going up. So as of yesterday, the market was around this area. Yesterday, and I actually took my stop loss to break even. I break even on the trade. So I owed the trade over the 9th. I was expecting that by this morning the market would have hit my target before retracing, but unfortunately the market came back to this place and created a low, created a high. If this high did not went up to break this structure, I wish this high went up to break this structure, I would have waited for my target to hit. But the market created the high, came back, create a low, and created a high that failed to break this recent high, and came back and shift. As you can see, created a shift in order flow. Immediately I saw this morning, I closed the trade. Exactly this place, I closed the trade. And what was that reason? I was looking at it this morning. I was looking, what is the reason why the market created this change in order flow? This is it. As you can see, there is a huge fair value gap here. There's a huge fair value gap here. The market tap into the fair value gap and change order flow. This is what we call trade management. It's called trade management. One thing is to analyze the market. Another thing is to have a good trade management, a exit plan and a entry plan. As you can see, this was my entry plan. There was the entry plan here, and this is the exit plan. That is it for that one. I'm already out of this trade, and there is still another trade I took. Where is that trade? On EURUSD. Okay, EURUSD. But that was a scalp trade, sha. It was like 1:2. Look at it. This is a counter trade, though. It's a counter trade. As you can see, the market was creating a structure here, and immediately the market broke. Okay, first of all, this is it. Let's go to the 4-hour time frame. On the 4-hour time frame, as you can see on the 4-hour time frame, we are bearish. We are bearish on the 4-hour time frame. And this is my key level that I draw. This is my key level. I'm expecting the market to come back to this key level and sell. But before that, the market is creating a bullish structure. which is the retracement, is kind of creating a bullish structure. It's creating a bullish structure. And that bullish structure, I have a point of interest. I have a point of interest, which is this particular level. A point of interest. A point of interest here. So the market was here yesterday. And I said, if the market comes back to this my point of interest, I will look for confirmation on the lower time frame to buy this market to this my point of interest. But before that, when I went to my lower time frame, as you can see, is a counter trade though. It's a counter trade. When I went to my lower time frame, I saw a confirmation here. This is a pattern for me. I saw a confirmation here. A confirmation here. After the market, this is like a ranging market from this place. This is like a ranging market. Immediately the market, I already put it in mind that if the market breaks this range, if the market breaks this range with a body, I'm going to take a sell to this level, which I did, which actually went well. 1:2. 1:2. So that was it for Euro USD yesterday. I also took another trade. Okay, this one was a missed trade on GBP, on GBP USD. It was a missed trade. This one is 1:2.30 also. As you can see, the same thing that happened on Euro USD. Create a low, create a high, break the low, create a high. And I was waiting, if the market breaks this low, I'm going to take the trade. I'm going to put my entry here, my stop loss above here, and target this key level down here. But yesterday, I was kind of busy. I was not on the chart when the market broke this low. The market broke this low. When I came back to check, the market was already at this place. So I put a pending order. I was waiting for the market to retrace back to this key level. Like I said, this is a key level. This is an entry key level for me. Waiting the market to retrace back and tag me in. But unfortunately, the market came almost few pips, like 1 pip to my entry, and the market dropped straight to my TP. So this was a missed trade for me yesterday on GBP USD. I think I also took another trade on. Okay, this is another trade on GBP AUD. It's also a missed trade because it's the same time. I was not on the chart when this one actually played out. So I marked this place. As you can see, the market created the high, created a low, came back, grabbed liquidity above this high, and created another low. I created another low. I was actually, when the market created this low, the market was actually around this area. So I was waiting. I said, if the market breaks above this high, I'm going to take a buy entry for it. But if the market comes down and break this low, I'm going to take a sell trade from here to this level. And I was actually busy. I was at work and I was not on the chart when this one actually played out. So the market came down, break this low down. I was around this place when I came back to the chart, and I also put a pending order because I was expecting the market to retrace back to tag me in and drop. And unfortunately, the market just came down here. We're just doing some shopping market and we move. This was a missed trade also. And there's still another trade I took on GBPJPY. Yes, this one is also a counter trade. As you can see, don't forget, on my counter trade, I always have confirmation. I have not closed this trade yet, but I'm on break even on this trade. It's the same trade. It's the same time I took the trade with USDCHF yesterday, but I closed the USDCHF because I saw a signal that the market is about to reverse. That is why I closed it. But this one, I've not gotten any signal that the market wants to reverse yet. That's why I'm still on this trade. As you can see, the market rally up, create a high, came down, create a low, failed to take this high, and the market was coming down. When the market was coming down, this is the confirmation for me to take the trade. I say, if the market breaks this low with a body, I'm going to take the trade from here. I'm going to take the trade from here, which the market did. The market closed with the body. You can see this red candle closed with the body, and I entered the trade from this small black candle here. That's when I entered the trade, and the market went down and came up again to my entry, even enter my stop loss area. And when the market enter my stop loss area yesterday, I was kind of this is a counter trade. I mean, this trade is about to go against me, but I just say no, you have to trust your analysis. So I left it, and the market came down again to this area, came up to this place. When the market was coming down, this was like yesterday, I moved my asset to break even and I leave the trade. So as you can see, we are still on the trade. Hopefully I'm expecting the market to hit my target, but again, you have to have a good trade management. As you can see, this was a low that was broken. The market broke this low, and the market retraced back, created a low, and the market, look at it, the market from here created the high, creates a low, and this low broke this low and retraced back and break another low. So for me to close this trade now, I want to see the market go up, rally up, and break above this recent high with a body. Then I will know that the market has reversed. Then I will close the trade. So that is it. Is there still another trade I took again? Is there still another trade I took yesterday? No, there was no trade. Okay, there was no. Okay, yeah, yesterday, this was a trade I was. Yesterday when I took the buy trade on USDCHF, I was waiting for this USD card to break this high with a body, but the market did not break it with a body. It only break it with a wick. I wish the market broke it with a body. I would have marked a point of interest here that will wait for the market to come in and give me maybe a bullish confirmation candle to take the trade. But the market did not break this high with a body, so I did not take any trade on this one. As you can see, I mark all my structure, all my key level, all my other flow, but I did not take the trade. So that is it. That is all for yesterday. So see you guys on the guys, please, I want you guys to do something for me. Please subscribe and like the video. Subscribe, please. Subscribe, like, and drop your comment on the comment section. What do you think about the trade, the analysis? Just give your thought. And again, don't forget, this is my own system. This is my analysis, and this is my trade. Your own might be different. Like this trade I took now, you might be seeing another thing here. Maybe I believe there are some people that are waiting for this particular set trade here, this fair value gap. They are waiting for the market to retrace back to this fair value gap so that they can take a set trade from here. That is their own strategy. They will still make money. As you can see, the market retraced back to that place, and they took the set trade and they are still making money.